for a bit.
Awesome, cool. All right, that's set up. Cool. All right. Yeah, so just kind of hanging out in here. Just kind of showing off the algorithm. We have some new updates rolling out here in the next couple of days. So yeah, showing off the algorithm and also just kind of charting, kind of a little Q&A session. So I have a blank chart here, uncharted. All it has on is the algorithm, and yeah. So if you guys have anything in particular you want me to chart or anything you want to learn about, like maybe supply and demand zones, support resistance, trend lines, breakouts, anything like that, I'd be happy to give it a look really quickly. If you guys have any suggestions, let's pull up the stream, make sure it is up good. There we go. Boom, boom, boom. Awesome. Boom, boom. Yep. Sounds good. Cool. All right, guys. HQZ, you got anything? What you been looking at lately?
Do I have anything? Not really. But if you want to pull up IBM and oh. Oh yeah, okay. I thought I was muted. If you want to pull up IBM and Uber and Delta.
Uber's a fun one to play. I never really get to play Uber. IBM on the, hold up, I gotta fix this music. IBM on the hourly looks like it could double bottom here. I have on Heikinashi. Let me turn that off. Just let me turn this off as well. So IBM looks like it could double bottom here and potentially go up. Kind of a perfect head and shoulders here forming. So we have here, 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 here potentially. Are you in IBM calls?
You have one left, yes.
Yeah. Okay. So yeah, I mean, when's your expiration?
This Friday, 1:35.
Gotcha. Okay, so on the daily, let's give it a look. Yeah, I mean, I think you should be fine. I would stop at like a break below 129.16 area. So like if it breaks below 129, I'd probably cut it. But no, I mean, it looks good for calls. Kind of an early entry, but I don't know. It's kind of weird to tell too because the whole market's terrible lately. So
there was one big doji.
Where at? Oh, this one.
On the whole market, I think like most of the charts.
Oh, doji. Yeah. On the daily. Yeah, it was really weird. But usually a doji is a sign of a reversal, and I don't think we see a reversal. I think we see a steady downtrend. And honestly, it was kind of a mid volume day. Like volume was 65 million. You know, not really a ton of volume compared to Friday, which was over 100 million, of course.
Yeah.
I mean, just kind of average volume, just kind of like a, really annoying day to trade, honestly. I entered some swing puts. That's about it. I mean, you know it's bad whenever the whole market traded within a range of literally $4. That's insane. That's literally crazy for the S&P to do that. But back to IBM, I like to look at the hourly. We can spot some supply and demand zones for you real quick, actually. Why not? So the most relevant zone would probably be this one, which is a rather large zone. Hold up. So right here. Let's draw a box. So from this bottom to this green here, that is a really big zone. Hold up. That's only a 1% zone. That's not that big. So currently IBM is trading within this zone, and historically whenever it breaks out of this zone, it has a pretty good move. Let's see off this.
What is the top we have on that zone?
Do what?
What is the top that you have on that zone?
130.75.
75, yeah.
Yeah, so that's your zone for it. Historically, it looks like a really strong zone, actually. I might even draw it a little bit lower to there.
Mhm.
Come on. Yeah, so that's really your zone. If it breaks down, you know, you can see bottom at like 125, but let me delete this head and shoulders. Yeah, I like it. I like it a lot for calls. We had a false break out of the zone here recently. Did we actually? Did it actually close? But yeah, we did have a false. So let me bring that up. All right, so your zone, your top is actually 131.24. That's the top of your zone here. Yeah, I mean, that's actually perfectly the top because see here on the 15, it retested it. And
Retested, yeah.
yeah, that's yeah. I mean, it's a good zone. Did you enter Friday? I'm assuming.
I did enter Friday, and the expiration is actually the 9th, so I haven't. I
Oh,
have
you have
plenty of
next
time.
Friday. Yeah.
Okay.
Gotcha. That's when my spy put expiration is.
Yeah, I need to get something on the put side.
Yeah, I mean, if you're looking for like a cheap put, I think Amazon isn't very expensive right now, and it's in a really good zone. I think it's gonna fill this gap all the way down from earnings. I think it'll eventually go back to 122, 123,
Yeah,
which
it's a
is
huge.
yeah. I didn't realize how much of a gap that was. It's a heck of a gap. That's a 5% gap. That's really good for Amazon. You're shorting it.
Yeah.
But I mean, just supply and demand off Amazon as well. It kind of just formed one here off this bottom. It's so weird charting these things after stock splits.
Right.
So here's your zone for Amazon. And I mean, you can't even tell whenever it retested it because I don't even feel like going all the way out, but I guess I will. Yeah, oh yeah, look, good zone here. So retested it over here. Oh wow, this is a really strong zone for Amazon. I'm gonna have to keep a look, keep an eye on this for
If it
I
bounces,
play it.
or if it.
Oh no, if it drops, play like a 2-week output, swing it. I don't swing plays very often, but it's fun to do every once in a while.
I think Intel might be in a similar position. Not as big of a gap, but I think it's kind of like trending in that channel
Let's check it out. I'm trying to
as
bring
like
up
falling
history.
wedge
There we go.
on the daily.
Oh my god, my girlfriend just sent me a car she wants. She wants a BMW.
Well, you better make those swings work, man.
I bet her full port. Where'd you say Intel's gap was?
On no, not a gap, just well, there's a gap to the top, but just a falling wedge on the daily.
Oh, on the daily. Let's see. Oh yeah, it's falling big time. This line looks like, huh?
Yeah.
Come on, stop magnetizing. It keeps magneting to other things. There we go. Something like that, and then upper wedge here. No, a little tighter, right?
Yep. Yeah, that's what I'm looking at.
Yeah, and probably more like this one, honestly. I think we just fell out of it. I would say it's more like this.
Yeah, and it like there's a bigger channel that's, I don't know, several months. It's like a fairly wide channel that's going down. That I was,
Like,
yeah,
it
kind of
looks
like
like
that.
it looks like it just kind of broke this one as well.
Hold on, maybe it wasn't on the daily.
No, I mean
What was I
here is kind of one on the daily. Everything I'm seeing is a broken channel for puts. Yeah, we even broke a resistance here. Intel looks very good for puts. Like puts all the way down to $29. 10% drop.
All right, so the channel I was talking about starts on 224, 222.
Wait, 224? February 24th?
Yeah. Okay, so it's
Here, okay, yeah. I see. This channel is
but
the one you're talking
no,
about.
actually you have- no, yours is better. I like yours better. Sorry, I was.
There's one here as well. If you color
Yeah.
differently like that. No,
Yeah, I guess
there's
that's
there's a few different ones forming. I
Yeah.
like see I like yours more. Crap, I just pressed the wrong button. Oh my god, what'd I just do? Okay, there we go.
No, this is good, man. The red line is
Jesus.
great.
Yeah, the red line's the one you did. That's your line.
Oh, okay.
Yeah, I like that one a lot more. But yeah, I mean, good wedge here. You could say it broke out of it here, and then fell back into it.
Yeah, my whole channel is like actually starts the upper part of the channel starts on what is that? January, the top of
Over here.
right there. Yeah.
Jesus. Oh my
Maybe not.
god.
Hold on.
I
It
bet
was
it
bouncing
starts
off
up
of
here.
whatever.
I bet it starts up here. March, maybe.
No, yeah, it starts at March. Yeah, you're right.
Yeah.
Actually, April, whatever is on 421 at the top.
And here's your trend, and it kind of broke out just a little bit. No,
Yeah.
it's this one. It's this.
Yeah, the smaller one. Yeah.
There we go. Yep, that's a channel right there. Yeah, I mean it's following it very nicely as well.
Yeah.
I just hate trading Intel.
So, I guess in general, getting the channel getting so tight. I mean, do you just wait for a break, or do you play, or would you play bouncing between the top and the bottom of the channel?
Either way, both of them are such low risk because if you're bouncing between channels, then like your stop loss is very, very low, and then if it does break the channel, you can just reverse your position. But either one, I prefer to play breakouts unless I'm just bored, because like this could be another. I mean, you could see another 6 months in this channel.
Yeah.
And I mean, the channel's, yes, it's narrow, but it's also like what, like a 3% channel at least. Oh, it's a
Yeah, it's
16% channel. Oh my god.
It's fairly wide for Intel's price movement.
Yeah, I mean, I think you could easily play bounces, especially since it's been maintained so well. If it was just like 1 or 2 hits, I might not play bounces, but since you have hits like 1, 2, 3, 4, 5, 6, especially off the top trend line and the bottom, you have 1, 2, 3, 4, 4 touches. I mean, I think if you touch it again, I think you could play calls, and then same with the puts, hits the top trend line.
Mm.
What I've been looking at is SPY, just from my algorithms perspective on the daily. This is crazy here. Okay, so I gotta turn that orange thing off. That's VWAP. Okay. So every time the algo calls short, it falls pretty well. It doesn't really call it very often, but on the daily, it called it back in April before the big dump. It called it back in like
COVID.
2010, 2008. I mean, it never calls it. See it? But every time it calls it, it catches very good moves for puts. But I mean,
So
ever
that's
since then, it's just been long.
As well, huh?
Do what?
Seems like it just called it as well.
Yes, it
Like-
called it today or yesterday.
Oh,
Or
yeah.
Friday. That's why I entered those puts this morning. Is my mic a little bit loud or quiet, or is it good?
No, man, it's perfect.
Perfect. All right, cool. No, I mean, it called it short here. Your first price target is 395. I
Right.
think we're gonna see potentially all the way back to 355 this year, going into early next year on SPY.
So, I've been thinking about. I think there's another FOM meeting for the interest rates.
Okay.
The month, I believe. Even that the last two, it pumped every time, like it went higher.
There seems to be one. FOMC next meeting is
24,
I see September. Why is there not one in August?
there wasn't one in August. It was just a conference without a meeting.
Hmm. Then yeah, I see
So-
September 20th and 21st.
Yeah, so I've been wondering if SPY is gonna go lower and then kind of rise up towards the end of September and just shoot up if Powell announces 0.75 or 1% raise, since that's kind of getting baked in right now, I assume, given what happened Friday.
Friday was, I've never seen a candle bigger than 3.4% on SPY on one day.
Yeah, I mean, at 10 o'clock, it was just...
There's just a few of it. I mean, it was such a steady day. I've never seen it. I mean, where is it? Here. Yeah. Never seen a day like this. I mean, here's open here. I mean, there's not even a gap. Like,
Yeah, it just continued.
Literally, you never see that from SPY. Never. That is crazy to me. Well, the thing, this is a perfect spot for puts. If you think about it, it closed here. This is the previous close. It opened here. It tested it, and it went down. I mean, that's a perfect spot for puts on the previous close where it didn't break.
Yeah.
But no, I mean, it looks like such like a boring day because all the candles look so small. But whenever you zoom in, the candles are actually huge. Like these ones, like 0.3% candles on SPY. That's pretty good. Then you look at today's, it looks like a little kid's. Yeah, today was terrible.
And the volume on it was something.
It was much lower, but I mean, how do you even compare volume to Friday? Friday was over 100 million volume. We don't see that very often on SPY.
Yeah.
Everybody's saying that SPY's chart, what the heck? SPY's chart looks similar on the daily to the 2008 crash. So like 2008, we see this big crash off the 200 MA. So I think I can change this to 200. Can I not? No, I can't. So let's pull up moving average really quickly. Yeah, so think of this as our previous high on SPY, like 480 or whatever we hit on SPY. This is 2008 or 2007. So it hit up here, had a little crash, just like how we're doing right now. And then it hit off the 200 EMA, I mean the 200 MA, just like we just did on here, over here. See, we just hit off this.
Okay, I see.
And now go to 2008. And then look how it had this huge, like enormous. If that's the case, like if history wants to repeat itself, we could see a minus 53% on SPY in the next year. Do I think we see that? God, I hope not. Do what?
I was just doing math. Like it's $400 right now, 50%, $200.
Yeah, it's crazy. I hope it doesn't happen because the economy. Oh my god. Like, that'd be so bad for the economy.
I mean, the job report's been good.
Where are they at? I haven't been reading them.
I mean, the last one was very strong.
Everything's just about inflation right now.
And I'm not really sure that the strong job report really helps inflation. But at the same time, do you really want a weak job report?
Absolutely
but I hear
not.
housing is like, especially where I am, like it's through the roof.
What is?
Prices. housing prices. They're just
Oh yeah, everywhere. Car prices. My girlfriend's looking for a car right now. She can't find one that's not marked up like 20%. Everything's marked up crazy.
yeah. So I mean, it's unsustainable. You can't keep it up like that for.
Yeah, but it's the yield curve. The yield curve is inverted.
Yeah, and that
That's
that
what
is a
signals
sign.
a recession.
Yeah.
I actually talked to my economics professor because I've always been told a recession is 2 consecutive quarters of declining GDP. And apparently the White House said no, that's not what a recession is. A recession is 2 consecutive quarters of an inverted yield curve. And I think we just closed out our first quarter with an inverted yield curve.
Semantics, but yeah.
One more, and I don't know. And the NCA is just crazy because you think about it. How can prices be going up? Real estate's going. Everything's going up except for pay and money circulating. And it's all because we printed billions and billions and billions of dollars for COVID relief and all these other things.
I mean, we've been printing since 2009, 2010, pretty
Yeah.
much.
Yes. And I mean, and you see like 2009, 2010, like we have this huge run up in the economy. Like everything's booming, booming, booming. But then, it caught up to us this year.
Yeah.
It had to catch up to you eventually. And why not this year? I mean, even back into, well, that's the 2020. That's the COVID thing. I don't know. I think COVID has a big thing to do with this. Just because we had this big COVID crash and then we got so inflated. Like whenever what, a year here, a year, 2 years maybe, we ran up 105% within 2 years. That's insane for an ETF, an index fund. That makes 0 sense.
Talk about doubling your economy size, huh?
In 2 years. I mean, it's just not. It's not right. I don't care who's the president. I don't care what's happening in the economy. It's not sustainable to double in 2 years. That's just not right. I don't know. It doesn't sound like a very good economic plan. Also, I think I just accidentally found a crazy trend.
I like that one though.
Oh my god. That was an accident. Wow.
Well, there's another channel there on the daily. So what is that dip?
Here?
Right for to the right. More. Like in the middle of that line.
Here?
Here? 3, yeah, guy. No, he just passed it. The one before that to the left.
Where?
Yeah.
To where?
To whatever's the bottom right. Yeah. Is that somewhat so? I was watching somebody draw channels.
Oh, I don't know if I would call this one a channel. I might would call this one a channel. I don't even know if I call this a channel.
The top and the bottom of the channel lines having the same angle.
Oh, parallels.
Or parallels, yeah, there you go.
Yeah, you can draw parallels on here. So you come here and draw a parallel channel.
Do you kind of look for that, or do you just
check chat on live stream 1 second?
I mean, you can't always draw them exactly parallel. This seems to be more disjointed.
A descending broadening wedge. Fob Manny, how do you mean? Can you send a picture of your wait, there's a descending broadening wedge. Can you send a picture of your chart? Yeah, sure. Feel free to send it in the live stream questions. It's under free chatting. It's a little bit easier to read than this little chat. Feel free to send your questions there. I cannot hear you. Do you have if you have a photo of your chart, feel free to send it in live stream questions. You should be able to send it. If you can't, let me know. But HQZ, the parallels, so you can come like, I think you can go like this. Here's your first line. Yeah, you can do this. You should be able to drag it out.
Yeah, I'm not sure how much I like that.
So that's technically your parallel into the bottom. I mean, it's just like drawing a channel. It's kind of
Yeah.
cool. But would I ever use it? Probably not. Because you're not really charting. I mean, you're just hoping it's a channel, I guess.
Sort of.
Yeah, I mean,
Hey,
not really.
sounds like most of my plays, man. Buy something and cross my fingers.
Is it better?
Yeah, much
Yeah.
better. Much better.
So yeah, so I drew a few things. So the phase you were talking about was that what I call the euphoria phase, where we just pumped for a year and a half.
Yeah.
Absolutely. I mean, it's just, like I said, it's not sustainable. It's not, it looks good for an economy, but it's not good for an economy.
Right. And then I had drawn before we started into getting into the broadening wedge. We actually had a parallel channel going on SPY, which was spot on until we had this um, nice little run. So here's my parallel channel.
It was a perfect parallel.
Yeah, it was a perfect parallel before we had that last push, which then
Was it from top to top here?
Yeah, I posted it. I don't know if you can see it.
Let's see.
Yeah.
I see. I want to pull this up for YouTube so they can see it.
So the last circle is what made the channel into a broadening wedge.
Yeah.
Yeah, that little run up. Yep.
Yeah. So that became a broadening wedge, and then we actually had to get a downfall anyway. So
Jesus,
just a matter of time.
Your chart makes me want to have epilepsy.
Yeah.
So many SMAs.
Yeah, I do have a lot.
Yeah, I mean it's we're in a weird spot, that's for sure. I mean we're definitely on our way down again.
Mm-hmm.
And I think we're gonna hit, lower lows. I think we're definitely gonna break 360.
Yeah, so that's what I was thinking too. That we should hit the previous lows, but it might end up taking going into in the third quarter for us to hit
100%. I think it might be, end of year, even into fourth quarter or into Q1 of next year.
Right. And it's just a matter, it's just that I just don't know if the market movers are going to let it.
I think they will, because, I mean, how do you really have a choice?
Well, I mean, it's all going to come down to, obviously, the earnings seasons will be a big catalyst coming next one. So, obviously, people are, and there's a lot of conversation already going on about the fact that the lows we've been hitting lately this year have already have the interest rate increase priced in. So people are aware that we got 2 more hikes coming into the year end. So people are assuming that this downfall right now is already priced in. So we shouldn't see a bigger downfall next increase.
I would say priced in, yes, but at the same time, like it tried to rebound to a point before we even knew there were interest rates. So I think you can't really price that in. I think if you price it in, you see a big drop first, like a much bigger drop than this. Like, would we see like a 20% drop from our high? Yeah, 24% drop. I mean, with big macro news like interest rates, which we really didn't get until maybe March, I believe. March was our first interest rate. I don't think you can really price that in, especially saying it's priced in after we already have a big rebound like we just had over the past month or so. I just think it's I think if it was priced in, we'd be lower right now. I think we'd be like 360 level already if it was priced in.
Right. So my whole theory was starting even before I look back. So if you look at 5-year, just do a 5-year chart.
5 year. Why can I not do 5 year? Oh my god. Not applicable. What?
It's
Oh
down there.
my.
It's down there by the bottom line before the date.
Oh my
Yeah,
god.
there you go. All right. So like the way I explain to people is, if you squeeze in, even if you go 10 years before that big dip is COVID right there on
Yes.
the left
Mhm.
side.
Yep.
Yeah. Okay. So go back 2 years prior to that, right? Okay. So that's your. So I don't know how much you guys know math and geometry. That's the slope of our market. So if you were to calculate that slope, so we were on a gradual ascent.
You mean this slope here?
No, just the last 5 years. Just
Oh.
2-3
Yeah.
years before COVID, right? Like we are on a nice little slope.
Right.
If you just take a top of all of that and before COVID and draw a line, it's a nice little slope.
You're saying that it's a low angle, like 10, 12, 15% angle, like rising.
Yeah. So like
He's saying
Right,
if
so
you
take
if you block out all of this, like this is not here.
right. So just go backwards to the left and timeline. Yeah.
Yeah, we were
Now
perfect. slope.
draw a trend line all the way to hitting all the top. So it's just a nice little slope, right?
Oh,
And
yeah.
then
Yep.
COVID happened. So you can draw. So I actually drew a parallel line right there, a parallel channel. You can draw a parallel channel, what you're doing right now. And then came COVID, and then we became a rocket.
Yeah, I mean a bad rocket too.
Yeah. And so, like, the way I say is, like, we have to get back to normal, which is pre-COVID slope, right?
Yeah, I agree.
So in order to get back to that slope, we have to go down to that level first, which is, like you said earlier, 360,
At least.
right? Yeah.
100%.
And then we would want to get back into this slope again.
Yeah, but do you think we just get back into the slope? I think we're gonna have go above, go beyond, below it, and kind of like
I don't think.
slingshot.
I don't know if
But-
we go beyond like down. I don't think we go beyond the slope on the downside.
No, I don't think so. Let me see if I can.
If we
Let's
do,
see
we
what I
have a
have.
long way to fall.
Right.
But no, it's funny because we're testing the slope right now, the previous trend line.
Yeah. So here's what I had drawn.
But by the way, since we're talking about this, and I kind of did a large time frame the other day, if you do monthly, if you look at the volume over the last 10 years, there's particular moments in time when volume kind of like just doubles.
Oh
Yeah,
yeah,
so
I
if
mean,
you
it's
look at-
exponential.
Yeah. So I drew a parallel channel, like I just posted the chart, and then that was what that's the pink parallel
Yeah.
channel is what we want to get to.
Gotcha. Yeah, I mean, I think we will. It's just a matter of how long will it take. And I mean, and also we're just looking at technical analysis. If you think about, what can break technical analysis, that's your macro events, any news. So
It's not like there's much going on right now.
exactly.
Right. I
the
mean,
only thing going on is your inflation. That's your 99% of what's going on.
yeah.
but,
As far as geopolitical news cycle goes, I mean, I think people have just gotten over they're over Ukraine issues already, and I don't think people are disturbed by all the sanctions with Russia.
Oh no, I think that was like a 2-week thing.
Right. I mean, so and then now you got the protests going on in Iran right now, so that might affect oil and energy for the next week or two.
Oh my
Like a
god,
cycle.
right now oil and energy is rocketing.
All right.
Yeah,
This is petroleum.
Oxy call today. That was pretty good.
Yeah.
I was so
I
mad
got
at
into-
myself. I had an alert on Oxy to go long on this day. It was like near open. I didn't take it. Look at this. My algorithm alerted along here. It shot up like this was like its 10% day that started its run. Yeah, 10% day.
We're in the 5 minutes.
Yeah, this is the 5 minute.
Yeah, I actually took SOM October 110 call.
Yeah. Just a leap, kind of, or just like a big swing.
Yeah, because I think with all this thing going on in Iran, I think gas is going to increase again. I mean, it is going to. And then, depending on what Iran does with this protest or whatnot, I mean, I'm not keeping it to October. I just got it because I think we'll get a nice little push next few weeks. So I'll just use that as an exit. And if it,
Yeah, I think
just-
XOM as well.
yeah,
Exxon's always fun to play. Let's see. Anyways, back to SPY on the monthly or weekly. Yeah, I mean, I think we definitely see this get tested. I just don't know how long it's going to take. It's kind of crazy that, you know, we're looking at it and we're actually perfectly on it. And we just formed a doji on it. I mean, how much more perfect can you get?
right.
I mean, it's almost like it wants to go back up here, but I don't
Is
think
that
it does.
spooky coincidence, or is that a confirmation for the technical analysis working?
Do what?
Is that a spooky coincidence or a confirmation for the technical analysis?
I think it's. I hope it's a coincidence because I
mean,
just
you
entered
see-
short.
And if you can, are you on weekly?
Yeah.
So if you go on weekly and just see if you can zoom in the last 4 candles.
Just
right?
these.
And yeah, the last 4.
And look at all the gaps.
So go. So is that a wick at the bottom? If not, that's a shaved bottom.
That's a wick.
on the red one.
Oh,
Is
the
that
red
a
one.
wick?
Yeah, that's a shaved bottom. Yeah.
Yeah. So that's a clear indicator that we got a downside coming.
Yeah, it's a strong downturn. Yeah.
Yeah. So now, and that's a weekly. If that's a weekly shaved bottom, then you know we got a couple of weeks of downside.
Well, I mean, we had a shaved bottom over here, and we only saw 1 week of downside.
Yeah, but what happened during that week though?
Who knows? That was beginning of June.
Beginning of June. Yeah, the June was a March and May cycle. So the March had a push, May had a push, and June or July had a push.
July had a push.
Yeah, so it's like that those 3 circles that I drew, that they were working out. So this one, and usually September, you know, it's supposed to be a down month.
It should. I think it will. I think it'll be I think we see like maybe even negative 10% this month.
Yeah.
I think we can
How
go
much?
10%.
How much are we down on SPY overall? 20
Since the top.
since the beginning of the year. Yeah.
Beginning of the year. Yeah, up here, January 3rd. I would say 18%. 16.4 right now. That's what it is. But
Okay.
from top to bottom, it was like 24. Yeah, 25.
Wow.
Which is insane for an ETF.
Mm-hmm.
So crazy.
It is.
My algorithm's giving us a long on the weekly for some reason.
I agree with your algorithm, given on what I'm holding.
Oh, I agree with it on the short on the daily, so I don't know. It never alerts short on the daily. That's why I'm so excited to swing this put.
Yeah. It's
Fine.
also
What?
What?
Man, no, nothing. I was just
Oh.
good.
there is also a weekly trend line between from on the weekly.
We have a small weekly
360?
uptrend here from 360.
Yeah, so 360
Bottom?
to the current weekly. If you expand it, there is a trend line, and today, this week, it's just now breaking. It's setting on right. That last candle is setting on it, like literally.
Or there.
Yeah.
Yep.
So, but if it breaks tomorrow, I mean, so obviously the week is not over, but we'll see.
Well, let's see what ES looks like. What are
Ooh.
futures? I mean, not really much
Well,
going on, to be honest with you.
Yeah, nice.
It's
Well,
just
Is that Is that daily?
This is the 5 minute. I'm just looking at today's ES. Hourly looks like it's trying to push back up. We look at intraday.
All right.
Yeah.
I need you to fall.
Well, that's is that hourly? Yeah. So that's a falling. That's a bearish rising wedge.
Yeah, off of bear flag.
Yeah. So I mean, I think that's just a fake, and it'll drop more on
Oh,
that.
yeah. I mean, just like how SPY today, we filled the gap perfect, and then we got rejected. That's very bearish. But look at the volume. Was that during the day? Oh yeah, it was during the day. Yeah, futures aren't really getting any volume right now. I think we see a breakout down here, and then we test here. Right here. This white line.
Is that, what is that? 4,000 for 08?
It's 4,006. Oh yeah, 4,000 is gonna be a fun level to break. For sure. Maybe 4,000 will be it'd just be crazy to say we broke 4,000 on ES and SPX.
Yeah. So I had from last week after the run, my first level was 405 coming into this week, which already got demolished last Friday. And then my next level was 395 to 392 on SPY, which I think we should make up by end of the week. If we break 400, we would have to break 400 first.
This is SPY on the hourly. Jesus, my chart looks like something crazy. Yeah, so SPY on the hourly, same trend we kind of drew earlier, if you want to redraw it. Just a huge falling wedge off of a, I guess you could say that would be a bull flag. Not really.
Yeah, so I had drawn on the
Hey, what's crazy to me is it looks like we're seeing a head and shoulders on the S&P. Like that. I think we're gonna see like a head and shoulders, which is crazy to say because like how do you head and shoulders a whole market? But I think we're seeing a big head and shoulders on the weekly and on the daily. Daily more so like this. So you have your here. I thought we're gonna see another one here. And then here's your bottom. Looks like a smiley face. Yeah, I think we definitely see like a lower high. I think we're gonna see a lower high by the end of this year. But like probably here. Around this area. Oh, that's January. I would say maybe in like December we touch here. Like 408 again. And then the fun starts where we really drop beginning next year. Which is just speculation. Who knows what's going to happen in the economy or earnings season or anything. I mean, technically, I guess we could just jump here if we wanted to. But...
Yeah, I think for like I drew levels on hourly and we broke 38.2 fib. So now that becomes resistance, and then the 405 is our for me that's our magic number. If we, I don't know if we'll get over it now. And then I have my next.
You drew this fib?
I drew from low to high on the hourly.
Oh, you drew hourly. Okay, hourly.
Yeah.
I'm on the daily. So from. Oh my god,
here.
where did you draw?
So our lows 362. What that low was?
Yeah, did you draw like this, or from our last No.
From the retracement, I do low to the high, so that gives us more downside to see how down it will go.
Yeah, but or are you playing from here? Oh my god.
Yeah. Mm-hmm.
You're playing from here to here, right. From here to up, to the right, or from the left?
Mm-hmm. To the right.
I can't grab it. There we go. So you're playing this one.
Yeah. So like, 405 should be our next resistance.
If we see it.
Well, we just broke it, so I'm hoping that now prevents us from going
I
up.
think we'll see 398
Yeah.
for the 0.5 fib, and then we'll see what happens there, because 0.5 is always a really hard fib to break.
Yeah.
But
So I have 396, then I have a 392. I honestly, as much as I'd like to think that from a technical perspective that we should see the previous lows, I don't think we will.
you don't think we're going to see the previous lows?
Yeah, I don't think we'll.
Of like
to go to
364?
360, people will start panicking again, and I don't think they want to panic.
Yeah, but we just saw 360 a month and a half ago.
Yeah, right. But it's like once it took off, look, it didn't even look back. It almost
Yeah,
like
it
a
did
mini,
rocket very quickly.
and that's like a euphoria phase, and
Well, it was just
people
like
trying-
people saying, I don't want to be down here, let's get back up. That's what people were doing.
right. And all the market movers, the big guns, they're not worried because they'll buy whatever they see necessary to buy. They know that this is not the end of the bottoming.
Yeah, I mean, the stock market's not dead. That's pretty obvious.
Yeah.
I mean,
Hey,
I
guys,
think... What's up?
Gotta bounce. Gotta go put the kiddo to bed.
All right, see ya, HQZ. Thanks for stopping
See ya.
in.
Yeah, of course. Thanks, man. Bye.
See ya. No, I mean, I think if we do see 364, I think we might double bottom and go back up. I don't know if we would break it, just because it would be such like a strong place for algorithms and moneymakers to step in.
Mm-hmm.
But I feel like we could see it for sure. I don't know. I'm a scalper, so like I'm gonna be sitting here playing off the 5-minute anyway.
So is that all you do is scalp?
Oh yeah, I don't usually swing. I'm swinging SPY puts for now, just because they're gonna work
I
out.
think
So,
I enter. The September one, right? No, yeah, the late September one.
yes, yeah,
I think I entered those.
yeah. I'm in SPY.
But I
puts.
did take half out earlier when we had a dip just to secure.
Yeah, we had a good 10% earlier,
Yeah.
but
Yeah. I mean, yeah, I mean, looking at the bigger picture, longer one, we were on the weekly. We were making lower lows until the last run, which broke it.
I just don't know how we can rebound the way the economy is. I don't know how we can rebound strong short term.
No, I don't think we're going to rebound. But they've already
No.
started talking about the fact that by end of 2023 Q1, the Fed's going to start cutting rates. I mean, they already started talking about that.
Oh, good. Yeah, I mean, I hope so. Just for the, just for everyday life. I hope they
And
start
I think,
cutting.
and as far as Fed is concerned, if they were to see the next leg down back to double bottoming, they're gonna have to step in again and do something just to kind of make a statement to bounce back.
Oh yeah, 100%. They're
And I
gonna
don't even
do
know
something
any more tricks.
like more rates or something.
That, or I mean, I don't think they can get away from the fact that what they said that we are going to increase every quarter. I don't think they can backtrack on that. That has to happen just in order to bring the inflation down. Because I think ideally we're supposed to be at 2.4% inflation, and I think we are at 8, right?
Yeah, we hit almost 10 at one point. It was like 9.6 at one point.
Yeah. So I mean, I don't know if it's realistic for Fed to think that we can bring it back down to 2.4, but anything around 6 or 7 will make the market pop.
Yeah, I mean, if you look at our, let me see, let me pull it up really quickly. Trading economics. Yeah, we were at 9.1%. Let me pull this up. know, it's lost. I'm gonna mute you for a second. There's a lot of noise going on.
Sure.
Not you, the other guy.
Oh,
All right, so if you see my screen now, yeah, you can see it.
yeah.
This was June, 9.1%. Back in COVID, we were at, why is it not letting me, like, what the heck? Let me go on the official website. Where is it? The CPI, here we go. So March, you know, around May, our CPI numbers were 0.1, like beautiful. For CPI, that's perfect. May of 2020.
Right.
And then we shot up 9.1 in June and now 8.5. So I mean, we are finally going down a little bit, which is good, but
Now, can you on that chart? Can you go back to like where are we? 2002. Can you go back further or no? Is that it? Because I wanted to see. I think I saw some charts a while ago that went back as far as looking at the data from the Great Depression.
let me see.
But it was. Let me see what I had. If I have that chart still somewhere.
I'm just seeing 12-month. What's interesting is whenever you look at gasoline,
Oh yeah.
that's always fun to look at. That's one of the most volatile charts there is compared to the everything else. I mean, gas is up
All that up.
59% right now. What's interesting
Oh.
is whenever we go through deflationary periods, like deflation, like the 2008 where we deflated down like 1.4%, 2.1%,
Mhm.
and then I get COVID, we deflated almost. We get down to 0.1, but we never really deflated. Just like how you can see these little, where it's shaded like this, it's
Mhm.
just your showing your decline. But yeah,
And you know, a lot of people don't realize it, like that the financial crisis was strictly U.S. I mean, it wasn't global.
you mean the 2008
because-
financial crisis?
Yeah.
Yeah.
I mean, it was. So a lot of people don't forget the fact that what we are going through now is not just North America or U.S.
Oh yeah, this is the whole entire world right now.
Yeah. So, you know, just because we start recovering or people start seeing some signs of life, you know, that doesn't mean there's the rest of the globe out there that's going to take a way long time than us to recover.
Oh yeah, for sure. It's going to well, some countries aren't strong enough to rebound as fast as the US. Like the US is pretty strong economically. I mean, yes, we
Right.
print a lot of money, and yes, I would say we waste a lot of money.
Right.
And we don't make the best economic decisions, but some countries, like you look at France, they're gonna be a long time just to recover from COVID.
Mhm.
France, who else? Even
EU in
Australia.
general-
Australia is still like, recovering from fires from like last year, 2 years ago, whatever.
Yeah, they have another set of problems, including COVID.
Yep.
So, but what I heard was like New Zealand. I think overall, from the world perspective, they were saying New Zealand is going to be in the best shape, or still is. I think it's recovered a lot better than the rest of the world.
Yeah. Oh yeah. I mean, it's hard to say, really. Is the rest of the world printing billions of dollars?
Mm-mm. But I mean, I think EU is going to play a big role in our status because they're going to struggle for a bit.
The EU, is that what you said?
Yeah.
Yeah.
EU
I think
overall
so.
is going to struggle. Germany might be the strongest of all, but EU is going to struggle because they rely heavily on Russia with energy. And everything.
Yes. All the NATO countries I think will be okay, but the countries that
Right.
are not NATO will control our oil
Right.
and gas.
Mm-hmm.
Because I mean, no NATO country really has a ton of oil and gas except for Ukraine, and they're not NATO. But I mean, it's like friendly countries is what I'm saying. Like Saudi Arabia,
Yeah.
China, Russia, your big oil giants, like they're not very cool with us right now.
No.
So
But
yeah,
that's gonna be a bit of a recovery for them. So, and
oh
obviously,
yeah,
you know, we always have to be out there helping them with billions. I don't know why, but we just do.
yep.
You know, so we
Because
can't.
yeah, we can't just stick to our own battles.
No, that's that would make us cowards.
Yeah, it's annoying.
So, but I mean, that's it would be good. Like, so looking at this chart, I was going to sit down. So this is SPX. I'll send it to you. And this is a weekly chart, a 5-year weekly. So what I wanted to do is I wanted to find in the past a scenario that looks like this with a broadening wedge and see how it went. You know, go back, look at the last 25 years of SPX.
You can't find one, can you?
I mean, you just have to go like on your chart. You just have to go SPX and then press all at the bottom. Yeah, and that's max.
I mean, there isn't one. I mean,
that's 94. What is that? 94 or what was that?
This is 2000.
The beginning of it is 96.
93 down here.
So do we see a broadening wedge anywhere?
No, I mean, no, not like the one we're seeing right now. Not even close. Maybe you could say this, but it's more of a parallel. Like it kind of a broadening wedge here, but not really.
Yeah, you'd have to like expand it and see if you can really draw a broadening wedge on that one.
Yeah, I would not say so.
I mean, it does look like it right there. If you take the
so this is all the way up to this is 2008 already. I mean, I'm on the monthly. So this is your weekly. I mean, maybe. I mean, it depends. No, I wouldn't even say that. No, that's not broadening. Maybe if you drew from these lines here. But no, I mean, it just hasn't happened in the market before. What we're seeing is like, it was something we never seen before. Right. People don't know how to react to it. I mean, you see this really nice line here.
On that second set you drew, yeah, right there. Yeah, make it wider. Yeah, and then bring it in, and then take the bottom on the bottom right. Take that point, the bottom trend line.
Yeah.
Take that and bring it down to right where the gap is.
Start it in the gap.
No. The bottom point, end it in the gap, and that's the parallel line. And if you bring that down to the bottom of the candle? Yeah, keep bringing it down. Yeah. Now can you match the rest of the points if you shift your chart up a little bit?
What do you mean?
Yeah, so draw it all the way down. No, the bottom point. Yeah, where you go.
I mean, you kind of see a broadening trend line here, but at the same time, just like, you know, this is 2008. That's your financial crisis.
Yeah.
Which, I mean, everybody's saying it looks just like 2008. What we're seeing right now looks a lot like 2008. I mean, just as far as the market hitting off a 200 moving average, you know, just like a high, low, lower high, low, low, you know. That's what we're seeing.
Yeah, but see on that one, on that after the first two humps, it just dropped.
Right, and
We
I think
have-
that's no. I mean, we're on the second hump.
And we have the
now.
opposite. We went higher, which is this last pump screwed everything up. We were doing
High,
just
low,
fine.
high, low, high. I mean, this is an ABC pattern.
Oh, Elliott wave.
You see A.
But I thought C was not supposed to go higher than B.
Well, you're seeing ABC put side. The C, A, same thing. C. So A, B, C, A, B, C. So you'd enter puts here. Or short here. Just go A, B, C, short. A, B, C, short. If you're playing A, B, C from a long standpoint, you know, you'd be going A, B.
I tried to study the Elliott wave. It's just too much work. Because there's like inside Roman numerals 1, 2, 3.
Yeah, it is kind of a lot. But you go A, B, C,
Wow.
long. A, B, C, long. I mean, here you go A, B, C, short. A, B, C, short. Yeah, that's just your basic, you know, price action. I'm not a big fan of Elliott wave, but that is
Yeah,
kind of what
neither
we're
am I.
seeing here. I'm just curious to see how this week ends. I think this week's really important just because of this rising line and then this falling line. I think if this week finishes red, which I think it does, I don't see how it couldn't.
Well, they have the end of the month from the weekend. There were still 8 billion left to be sold.
8 billion what, shorts or?
Yeah, what was that? Hold on, I have it written down on my server.
I mean, you're also having we just fell out
for
of a
the-
supply and demand zone on the daily as
Yeah,
well.
so this is what Goldman said right here.
Goldman,
No, not Goldman Sachs.
Goldman, yeah, Goldman Sachs, yeah.
So they said, you know, there was still 9 billion left over after the sell off on Friday, the August rebalancing. So we still have opening today. There were still 8 to 9 billion left for rebalancing. So I don't know how much we did today, but we still got 2 more days.
Well, we had a low volume,
Right.
so I mean, we did. I
So-
don't think we saw a whole lot today, honestly.
No. But I think in SPY, if we break 400, we should start flushing.
Yes, I agree. But it's funny. Goldman Sachs is coming to speak at my university on Wednesday. I'm
Ah.
excited to talk to them because just stuff
What
like
school is
this. University of Louisiana Monroe in Louisiana. Their vice president's coming to our school because I'm in the I'm in the College of Finance, so it'll be neat to talk to him and just kind of see what he thinks about this. Because I don't know, it's neat hearing from an expert like a vice president of Goldman Sachs.
Mm-hmm.
Really interesting. But no, I
Yeah,
mean,
but out of these,
go ahead.
a lot of these bank fuckers, they tell you what you want to hear. You know. they
Yeah,
wanna
but
be
I
all-
don't.
you know.
I don't care. I mean, if I got just getting to talk to him, I don't care.
Oh, yeah, I agree.
Really, what I want to
Yeah,
hear
for
now.
you,
It's just cool. Yeah.
nice.
I don't know. I feel like we had one speaker come. He actually, his family sold a company to Warren Buffett, but they still manage it, a big furniture company, and like he is their financial manager, and really nice guy, really interesting guy, and he was really open and honest about like how, in his opinion, equity is going away from stocks, and it's going away from markets, and it's going into your other things like not just real estate, but it's going into different markets. more money is going into bonds more than ever right now, which of course during recession, of course it would. But
Yeah, because people want safe haven, right?
correct. But I mean, it's like over the past like 5-10 years, bonds have gone up crazy. Even though the past 5-10 years, stocks have gone up crazy. But I mean, people are pulling the money for stocks and going into other like forms of investment, whether it's gold, whether it's art, whether it's businesses. You know, people are investing their money into different things that are not like stocks, which I thought was really interesting because for as long as I've ever been alive, stocks was all anybody talked about. You know, as far as whenever you hear investing, you think of investing in stocks like synonymously, like they're the same thing.
Yeah, but I think what's happening is, you know, your generation is pretty much now taking over as far as financials are concerned. You know, when I was growing up, you know, the baby boomers before me, they were all about like, okay, I'm just going to take 5,000, I'm just going to buy IBM, and they just, and once they buy it, they were done with it. It was more of a static.
They held it.
Yeah, they're static investment, right? Because they didn't believe in, you know, that they were all, baby boomers were always low risk takers, and obviously that's because of their time and the war or whatnot. And then came our generation, and we got a little bit more education, and we considered like the transition because we didn't have internet, but then we did have internet when we got older. So I went to college in '90. So, you know, there was no Google. There were computers, yes, but then come 1999 and 2000, and things change. So, but like now, baby boomers are just pretty much lost. I mean, as far as they're concerned, their money is just, they don't even want to touch it. They don't want to rebalance it. Nothing like that.
Well, I mean, the stock market went from investing and like building something for the next generation, you know, like for your kids, to now people want to throw money into it and get rich really fast. And that's just not what the stock market was originally. It was originally investing. Now it's just all about trading and like making these quick swings, you know, like months at a time or days at a time or minutes at a time. If you're day trading, it's just totally different than it used to be.
Well, I mean, a lot of that too in the last 20, 25 years is because of the internet.
Absolutely. I mean, you don't have to call a broker. You don't have to call anybody. You can do it on your phone.
Exactly. Yeah. I mean, I remember my uncles, and they were trading, and I'm like, this is crazy. Like, by the time you call and make a trade, price has already gone up.
Yep.
It was crazy. So now, and then this COVID brought in so many retail traders. Oh my God. So many.
Yeah, but I still don't think it's enough to outweigh all the big investment firms. Not even close.
No,
not even a percentage.
But what COVID brought is all this money. These guys, they were all newbies, and they're like, yeah, I'll just learn it. And yeah, and I give you that. I totally admit that some of them did become good traders, but very few.
Yeah, a lot of them went in and they were like, oh, GameStop's going crazy. Let me put my money in the stock market. And I think that just kind of blew up a bad, it gave stocks a bad name for people my age, really.
Right.
Because I don't know very many people personally, like in my friend group, that invest. And I think, one, because they're afraid, and two, because they just don't know where to start. You know, they're afraid they're going to lose money. They don't know where to start, and they don't know where to get education for it. And I think that's where so many people went wrong, especially, you know, March 2020. That was COVID. I turned
2019. Oh, 2020.
2020. Yeah. So that was, oh my God, how old was I? I was 17. I'm only 19.
Wow.
Yeah, crazy. But so I was 17. So okay,
good,
2021. That was the Dogecoin. Dogecoin went crazy in 2021. As soon as I turned 18, it was so funny. And it was just crazy. Dogecoin, GME, AMC, all the memes.
But I think that's the thing is, and the other thing too that's different now in the last 25 years is people are actually getting into the market for trading at a very younger age.
Oh yeah.
Way.
Well, I mean, it's crazy because people have wealth at a way younger age now.
Right.
I started my own business at 14 years old, which is crazy to say, but I mean, I started a business, started making money, and
Right.
it's a new thing where like 15, 16, 17-year-olds can get on their computer and make money, Amazon fulfillment, trading stocks, crypto. I mean, there's so much you can do now. It's crazy.
Right. Yeah, I mean, I think all these. So the younger generation is bringing in money, but then again, they don't. I don't. When I look at them, they don't seem to have a good head as far as savings goes. Like
Oh yeah,
that means
100%. Yep.
for retirement, because that's our generation and our parents' generation. Like we were all about like, okay, what are we gonna do when we're 60 plus, right?
Yep.
But your generation and the millennials before you, they're not looking that way because they're all about instant gratification.
It's a
Yeah,
microwave society.
right. So, you know, very few that I come across, millennials and your generation, where like, yeah, I've already started a Roth IRA, and then I'm like, wow, really?
Yep. I
Like,
started one at
I was,
18.
yeah. So like, my daughter just started college, and that's the first thing I did. She's turned 18 is open up a Roth, and I told her every year, put in whatever you can. You might not understand it now, but when you're 30 plus, you're like, oh, I'm glad my dad made me start. You know.
Yeah, I mean, just going into the financial field because I want to go do portfolio management and stuff for bigger investment firms.
Right.
I figured it'd be a good practice just to start investing into a retirement early.
Yep.
Um,
Always.
and just making my own portfolio early, for a long term like that. But
Yep.
no, I mean, it was funny because like I got it, I maxed it out, the 6K a year, and I was like, all right, let's see what happens. And then it dropped because I put like half of it into the S&P, and then like I bought some Apple, some
Right.
commodities.
Well, I mean, yeah, but this is all longevity, right? So we're not
Oh
even
yeah,
doing
yeah. I
the
mean, I got
needed math.
40
Like, a
years
lot of
to let
people
it sit
start
there.
panicking. Yeah, because I told them don't do short term math on those. On those, you got to look at the long term math, and it's going to
100%.
work out just fine. So people start panicking and make decisions, and they just kind of then they go back. It's like, oh shit, 2022. I wish I would just stayed in and taken the loss, but it's too late now, right?
Yep.
So I think next year we should be okay. We should start, smoothing things. I don't think we're gonna bounce up, but I think we'll start leveling off.
Well, just kind of like you said, like get back into a trend. That's all we need to do.
Yeah, yeah. Well, I mean that, and we have to shake off the fat, and by fat, what I mean is the retail traders that joined because of
Oh yeah, the
COVID.
people that don't know what they're doing.
Right. So that has to go away.
And we need less retail traders and more legitimate investors.
Right. Right. Well, I mean that, and we also, obviously, we also now if we like all these companies that are doing budget cuts now because of whatever the cost reduction and whatnot, which is smart. But I'll send you a little excerpt that CEO for Home Depot did. He said pretty amazing, like out of the box thinking. I'll send it to you. But if these companies in 2022 are all going to shred their pounds because of for the right reason, it's just too expensive. They can't, they can get a job done with less people. It's all good reasons. They should continue that lean trend for the near future. It's just because 2 years from now economy becomes healthy, they shouldn't start hiring crazy.
Yeah. It's also weird
Keep,
because we're in a new era of technology where you don't need as many workers.
right.
It's just we're in a I don't know, what do I say? We're in a era of change. I mean, that's what it is,
Right.
and it's just changing so fast.
Yeah, but I think we stay lean. Try not to do too much exports, imports from China, which I don't think we can get away from that. That that's not going to change.
Oh, yeah, 100%.
um, you know, technology is going to get even better, or I guess worse, whichever word you want to use.
Mm-hmm.
So it's going to be, the next 5 years, the EV revolution, right? The autonomous revolution.
Yep.
Um, automation revolution.
Yeah, I
So,
think
mean,
I think California just announced they don't want any more gas cars made after 2030.
right. So like, if they pass this kind of stuff, then and you also have to realize uh, the generation that's going away and the generation that's coming in. So the generation that's coming in is ours, and the next one after ours is the millennials. So that's the two generations that you guys should focus on.
Yeah.
Like, what are they going to bring to the table? Because they're bringing in a lot more education than the previous two generations.
Well, yeah, and I mean, it's just who has the money now, and yeah, the millennials will have the money. They're getting older, they're gonna have the savings, and
Yeah,
well,
the
hopefully,
thing with the millennials is they were supposed to learn from our generation, which is Generation X, but they didn't. So when they come into power, politically and corporation wise, it's going to be interesting to see. But they're very much, outside thinkers. Well, we think both ways. We also think conservatively, but we also think saying, yes, let's take some risk. Millennials are a lot more risk takers
oh, 100%,
than
yeah.
right. And then comes the next generation of millennials, which is the Z, which they're just crazy.
Yep, that's how it is. I mean,
We'll see.
I think the next generation will be hopefully like a reset generation. Sounds weird, but we almost need a war to kind of change the generation a little bit, if that makes sense. We need some struggle and hardship a little bit. We need people that know how to work and want to actually work towards something. Because right now, a bunch of people are living off of like generational wealth.
That's true, but the thing you said earlier, that the whole point of the blue collar is going away because everything is becoming automation.
Right.
So your generation is never going to know what a blue collar job is like, right? So for us to say yes, sweat, earn $1, that's going to be hard for you guys because for you guys it's all point and click. Millennials, I still see them doing some hardships, but you guys, I don't see you guys breaking a sweat.
No, I mean, not whenever you can sit behind your computer and make double the money.
Exactly. Right. So there's going to be a lot more home income.
Yeah. I just hope we see more businesses.
Yeah. Taxation is going to increase.
Yeah. I mean, I hope we see more startups, and less people trying to buy into these big corporations. Like, what almost scares me is everybody's doing this Amazon fulfillment, right? And it's making Amazon rich. Like, yes, people are making good money off of Amazon fulfillment and stuff. And like, it's good, I guess, for my generation as far as making money. 1 second. It's good in that sense, but I don't think people realize that they're not really building anything for themselves, right? It's like renting an apartment and not owning a home. Like, you're paying all this money, you're investing all this time, but what are you getting in return? I think we need to get into a mindset of, hey, let's build something for us. Let's build our own business. Let's build our own brand. Let's let's do our own thing. Let's not just work for these big corporations. And I think once we have people that will do that, or more people that will do that, then it'll be more financially independent as far as the whole generation goes. And we'll see a lot less Walmarts and Amazons and Apple. I mean, of course, you're still going to see they're still going to be huge, but I think you're going to see a lot more startups in the coming years.
Yeah,
I hope so, at least.
I'll have to wait and see.
Yep. Well, it's getting late here. Thank you for hopping on. But
no worries.
Go get a shower and probably hop in the bed. But cool. I'm live. I try to get live every day. I'd love for you to hop on and just come have a conversation. It's always fun.
Sure.
I'll just tag in my bot channel whenever I do. It's just me and you. Let me end the stream.